The Federal Reserve is reportedly testing the legally questionable concept of so-called helicopter money as it struggles to come up with a policy response to future crises. One America's Kristian Rouz looks into the matter.
The Federal Reserve's latest efforts to support economic growth in the U.S. are stirring controversy yet again. According to Treasury Department documents, on December the 16th, it sold $36 billion worth of 6-month bonds, and just 3 days later, the Fed purchased $7.5 billion of those bonds. This alleged monetization of the U.S. federal debt may suggest the Fed is considering dropping money from the sky in case of a new recession.
No inflationary pressures, as there aren't in the U.S. today, despite secularly low unemployment rate, the appropriate response to a fiscal stimulus, should one be needed for counter-cyclical reasons, is to monetize it, to engage in helicopter money, to use the popular expression.
Helicopter money was first described by economist Milton Friedman back in 1969. What it means is, in times when interest rates are low, but the economy isn't growing fast enough, the central bank could support GDP growth with direct money payments to households. That money comes from government borrowing, potentially inflating the dangerous debt bubble.
And the only way to fix it is to give these agencies less money. But every time I propose giving them less money, we don't get one Democrat to vote for less spending, and over half the Republicans won't vote to cut any spending.
Over the past year, President Trump has repeatedly called on the Fed to cut rates to zero from the current 1.75% to help the U.S. compete with other low-interest markets. However, economists say zero rates aren't helpful to domestic growth any longer, as U.S. households are already $13.5 trillion in debt, and there is no room to borrow anymore. The Fed's latest actions suggest it may be taking the first steps towards helicopter money to prepare for a future crisis.
But you can observe that the moment that the interest rates went down after the crisis, the reform momentum has stopped. And it is understandable. For governments, it's much easier to hope for lower interest rates. That creates the space for them to spend, rather than actually curing the underlying problem, which is low growth.
Meanwhile, monetization of the federal debt is prohibited by the Fed's charter, and central bankers have denied doing so in the past. However, monetizing Treasury bonds several days after the issuance is perfectly fine, and that's what the central bank appears to be doing. Economists say helicopter money is the only viable alternative to so-called modern monetary theory, advocated by Alexandria Ocasio-Cortez, and calling for borrowing without the intent of paying back.
So this is the view that we can just print money and create growth. I mean, I think of all the ideas I've ever heard in my lifetime, that's one of the stupidest. I mean, if you could create growth by printing money, then Zimbabwe and Argentina and Venezuela would be the richest countries in the world.
Still, neither helicopter money nor MMT offer a solution to America's debt problems, while cuts to federal spending are not realistically expected. And economists say the Fed's experiments may prevent a crisis, but that comes at a charge to fiscal sustainability going forward. Kristian Rouz, One America News.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube, and call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.